And for this week's stock picks, Anthony Clark from Small Talk Daily Research brings us his analysis of Nampak, Premier Group and Reunert. Anthony, thanks so much for your time today. Now, you are seeing value in the mid-cap sector, kicking things off with your first pick, which is Nampak, a turnaround story at play there under the guidance of Phil Roux. The group managing to streamline operations and get rid of non-core assets. Now, this has been your fave for some time now. Are we still guaranteed upbeat returns, or will things start normalizing?
Yeah, hi there. And I know it's a bit late, but a very happy new year to the listeners who perhaps only came back from their desks a few days ago. Yes, Nampak has had a fantastic couple of years. Let's not forget that it was only about 2 years ago you could have bought Nampak for about 200 Rand a share. And today we're at about 532 Rand a share, showing that the turnaround strategy, instigated by the activists, supported by shareholders, and implemented by CEO Phil Roux, has delivered significant benefits in terms of earnings and share price for underlying investors. Now, I'm sure you're aware that Phil Roux is stepping down in the next month or so, and his successor is a gentleman called Riaan Hale, who is a former CEO of PepsiCo. And Riaan and Phil used to work together way back in the day when we were at Pioneer Foods before PepsiCo took it over. So there's continuity in the management change. Now, what Phil has done in the last 2 to 3 years is what I call all the heavy lifting. The restructuring, the asset sales, the cost cutting, and all the necessary work to actually rebuild what was basically a shattered, bankrupt company. We now have a business with a much stronger balance sheet. Debt has more than halved to 2 billion Rand. Earnings are up, revenue is up, margin has improved. But what Riaan will bring to the party in the next month or so is operational efficiencies, investing in new capacity, and hopefully then improving the profitability. Because what happened in Nampak in the last 12 months is demand was there, but they couldn't meet it because of their own internal issues. In the next 12 months, new capacity will come on stream, enabling them to actually meet the demand for products which they are able to produce. That will deliver more profit, more earnings, and in 2026, I'm convinced, a big fat first dividend for shareholders.
So from turnaround efforts to now we're going to probably see operational efficiencies coming through. Now let's take a look at your another pick. One that's on your radar is Premier. Generally the food producers had a good year in 2025. Why is Premier your pick there? Are you eyeing the value that could be created within that RFG deal?
Yeah, that's one of the elements of my selection this year. I chose Premier Group in 2024, 62 Rand. And at today's price of nearly 179, it's up about 190% in the best part of 2 years. It's on a price earnings ratio of 19, which might sound aggressive for what is a food company that just produces bread as its main business. But the Premier Group has a fiendishly good management team and their ability to extract margin, down to the cent level from producing bread. Now, with a market value right now of about, we're talking about 18, 19 billion Rand. They're swallowing up a mid-cap player in Rhodes, which has a market value of about 7 to 8 billion Rand. Now, I've written last year on the back of this transaction, it's not just 1 + 1 will make 2, it'll be 1 + 1 makes 3. Because Premier have the ability to write big checks to actually expand a number of the divisions inside RFG Group, which perhaps the RFG Group didn't have a means to actually write those checks, or perhaps the ability to take on such a large risk. Within Premier, given the size of the business and their balance sheet, they will happily write checks to expand Heinz Spices, to expand Rhodes Juices, to expand the ready meals business, which is, as we all know, is a large supply into Woolworths. So that comes then with significant uplift in capacity, in revenue, and let's not forget about the cost-sharing benefits of putting two companies together and saving money on the likes of insurance, banking fees, interest costs, and the underlying efficiencies from supply chain logistics. I estimated the first year of this combination, about 150 million Rand will be saved just by combining the two entities. So with the Rhodes and the Premier share price having run very strongly since the deal was announced late last year, I see a significant runway ahead for earnings expansion, for continued earnings growth between 25 and 30%, and then, of course, share price appreciation and, of course, dividends. So despite the fact it's had a good run, my target value for Premier on a one-year basis is 230 Rand with an ultimate target of 265. So despite a good run, there's more to come. There is more jam on this piece of bread.
And just looking at that sector as a whole, Anthony, do you expect to see more consolidation there? We speak now of that RFG Premier deal, but we also had towards the end of last year, Lipster talking of potential buyers at their door.
Yeah, that's a great question. Yes. Again, in 2024, I highlighted that Libstar, in my mind, with a market value back then of about 2.5 billion Rand, was a classic asset for someone to take and break up or to try and consolidate. I understand that Premier did look at Libstar, but in the end went for Rhodes Foods Group because of the scale and the businesses that Rhodes had inside it. I've also gone on public record saying that Rembrandt, which owns 80% of the RFG, sorry, I'm tongue-tied, of RFL Food Company, they may also be on the chopping block because ultimately everybody thought that Rembrandt would buy out the food business and merge it with Sakalo Foods. But sources tell me that perhaps Rembrandt, depending on the price, would happily have sold their foods operation to another party, perhaps in exchange for a stake in the larger business. So going forward, I think consolidation always happens in a fragmented industry.
Yeah.
Now, South Africa is not a fragmented industry. It's not a fragmented sector. We've got Tiger Brands, AVI, Premier, Libstar, Rhodes, etc., etc. But I think going forward, margin comes from efficiency, profit comes from scale. So going forward, I would not be surprised if some of the smaller mid-cap groups like Rhodes and the Rembrandt food business get snapped up in due course. Watch this space.
Yeah, interesting times ahead for that industry, Anthony. Last but definitely not least is Reunert. Looking at its last financials, it really was a tale of two halves where we saw, a downbeat first half, but some strength coming through in the second half. Quite an interesting business as well, operating in quite a lot of sectors. And one that stuck out in particular last year was the defense exposure that it has. Just your analysis on that counter.
Yeah, again, you're correct in your assumptions there. They've had a terrible first half and a much stronger second half. Now, this is a company right now which has a market value of about 11 billion Rand, price earnings ratio of 9.5, a dividend yield of 6.2%. Earnings last year were nothing to write home about. But Alan Dixon, the CEO, who is stepping down in a month or two, has left the company in an extremely solid position financially and in terms of a strong balance sheet where all the underlying touch points, from defense to circuit breakers to cables to general infrastructure, is performing reasonably well. But in certain parts of Reunert, what it really needs is domestic infrastructure growth coming from this government to uplift underlying capacity utilization. As he said to me at luncheon in November, their cabling factories are running at around 70% utilization and making okay money. But if Eskom and municipalities and the general government were to spend money, uplifting the infrastructure in this country, which we know needs to be desperately done, then Reunert's factories are extremely well placed to benefit because they're running at subpar. Similarly, whilst war is never good for the soul, it is always very good for profits. And we've seen conflict around the world and countries wishing to reposition themselves to perhaps protect themselves from advances by enemies looking to upskill their defense industries. And Reunert has got a very fat order book of 2.5 billion Rand, mainly in battlefield communications and security situations, which again could be a very interesting place to be in the next 12 to 18 months. And Alan Dixon indicated that perhaps going forward, joint ventures in that business with leading international players could potentially unlock value. The real kicker of Reunert is the new CEO coming in. It's called Antoni de Beer. He's coming in from Ethos Private Equity. So Reunert's board brought in an outsider, which means they brought in someone with a completely different way of thinking. Someone who's known for either adding value to companies and extracting the best from them or breaking them up to get value for shareholders. So I think I will be watching what Mr. De Beer does very closely in the first few months of his tenure, which starts, I think, on the 1st of March, as to could Reunert be the value play that many thinks it could be. But even if it's not, his different thinking and his guiding hand hopefully will make the constituent parts operate better and operate more efficiently and profitably.
So what I'm getting here is that among the investor community, sentiment is upbeat when it comes to that leadership change.
Yes, very. You know, for the last few years, for the last many decades, Reunert tended to pick people from its own internal ranks. Now, by going outside of a company to get somebody in with perhaps a different way of doing business can only be a good thing, because as we all know, businesses tend to get very stuck in a culture when you only promote from within. Bringing in a fresh outsider with a different set of eyes could see different opportunities and perhaps different value creation scenarios for Reunert. So I think Mr. De Beer coming in is a good thing.
All right, let's leave it there. Anthony, thank you so much for your time and taking us through those counters. That was Anthony Clark from Small Talk Daily Research.